Okay, so let's get back to looking at operating leases versus a finance lease. I just adjusted the laptop, so hopefully we'll have a little bit better results. So let's go back to an operating lease. So an operating lease is one that gives the leasing the temporary use of an asset without having to buy it. Okay, so again, it sounds about right. Think about you rent an apartment. Well, you're getting to use it for a temporary purpose. You sign a year lease, okay, and you don't have to buy it. So it's relatively a short period compared to the economic life of the building. So again, if you rent a brand new apartment in a brand new building, okay, you might get a year lease, but that building might last 100 years. So again, it's a relatively short period compared to the economic life, and that's one of the the capital lease criteria. Okay, so again, we're going to compare the economic life of the asset compared to what we're using, and that's going to trigger, is it a capital lease or an operating lease? So short term is a relative phrase when it comes to asset leasing. Okay, so a 10-year lease is short term when it applies to leasing a building, or a year lease, what I just said, or part of a building. And again, that building might last you 60, 80, 100 years. So basically, an operating lease is a lease that is not a financing lease. Okay, so when I use the term financing lease, it's also called a capital lease. Okay, so I'm going to use the term finance lease up here rather than capital. That's old terminology, but whatever. Okay, so anyways, we're going to now look at what is a finance lease. So when we get a scenario of, well, do we call it a finance lease or an operating lease? Again, so if it's a finance lease, we have to put it on the balance sheet. Okay. So again, that operating lease, fairly simplified, but now we're going to get into the finance lease. So the finance lease is dealing on page 1246. So finance lease is any lease that transfers substantially all of the risk and rewards of ownership from the lessor, the leasing company, to the leasee, the company that wants to lease the asset. Again, finance leases are also referred to as capital leases. I don't know why they changed the terminology. Okay, I like the term capital leases because we think capital asset, we're putting it on the balance sheet. For whatever reason now, people who have more decision making capabilities than I do have decided, well, you know what, let's call it a finance lease again. I don't agree. I like the old terminology of capital lease, but whatever. Okay. So the classification of a lease as finance or operating depends on the substance of the lease rather than its legal form. So it's based on judgment, and we got to assess these guidelines. Okay. So let's look at the bottom of page 1246. So again, how do we determine if this lease is a finance lease or is it an operating lease? So again, there's three main criteria. There's actually a fourth, so I will erase that three. Usually, though, three is all we're reading. So the four criteria for a capital. This marker is garbage. The red markers seem to be working. Ah, they're up here. I gotta stop into the college today. Anyways, so first of all, a lease is classified as a finance lease if it meets any of the following. Okay, so the first thing we want to do is look at one. Is there a bargain purchase option? That does not look like me. bargain purchase option. What this means is, let's just say, well, what's the example that we have in the textbook? So this occurs if the lease provides for automatic transfer of title to the leasee at the end of the lease. Or 2, if the leasee is entitled to buy the asset at the end of the lease term at a price significantly lower than the expected fair value at that time. Okay, so let's just look at an example. We lease a piece of machinery, okay? That piece of machinery, the total value upon inception, lease inception, is $200,000. At the end of the lease, okay, if there's an option for us to buy the piece of machinery out for maybe $1, when the fair value of that $200,000 piece of machinery after 5-year lease is now, say at the end of 5 years, that fair value of the lease item is $80,000, and we have the option of purchase for $1, that's a bargain, okay? So that would be one of the criteria for a capital lease. Or we might have a bargain purchase option if if the ownership of the asset just reverts to us at the end of the lease. So is there a bargain purchase option? Okay. Now, I gotta keep watching time because YouTube doesn't like us posting videos that last longer than 15 minutes for some reason. So capital lease criteria. Okay. 2. Will the leasee receive substantially all the economic benefits expected to be derived through the use of the leased property? Okay, so economic life provision is what I like to call it. I always say 75%. So, are we going to be using this asset for greater than 75% of its economic life? What does that mean? Again, so we said our asset, the equipment, cost $200,000. Our lease term, I'm making all this up, the lease is 5 years. The expected economic life of that thing, okay, is, let's just say, the economic life, the manufacturer said that it would last for 7 years. So the economic life is 7 years. Or sorry, the life of the asset is 7 years. We're going to use it for 5. So 5 divided by 7 equals 71%. That's not a good example. Okay, let's just say it's 6 years. Okay, because we want it to hit over 75%. So 5 divided by 6, 83%. So we're going to be using this asset for 83% of its useful life. Okay. So that meets the criteria of greater than 75%. Okay. So again, that is a capital lease criteria that we have met. So as long as it meets any one of the 4 capital lease criteria, we capitalize that lease. Okay. So let's just say there was a bargain purchase option, but the economic life that we're using it for is less than 75%. We'd still capitalize this the lease because we met one of the criteria. Okay. And vice versa. Maybe we meet number 2, but we don't meet number 1. Well, there's the third one. Okay. So the third one is related to present value. Okay. So number 3, and when we look at our textbook, it says, will the lessor be assured of recovering substantially all the investment in the leased property plus a return on the investment over the lease term? So they're going to use 90% as the, I just like to say present value test. So how do we determine that? Well, we're going to figure out the interest rate, the term of the loan, or sorry, the term of the lease, and then use our present value calculation. Okay? And an example of that is on page 1249. Okay? So notice here that it says, consider an equipment lease where the leasee agrees to pay the lessor $100,000 at the end of each year for 4 years. The fair value of the equipment being leased is $300,000. Okay. The asset has a 4-year useful life. So that we're going to use 10% because that's the leasee's IBR, which is the incremental borrowing rate. Okay. So again, look at this formula. Okay. We're going to make our payment, okay, times. Now we're going to get these from our tables in our book, right? Our present value tables. Present value of an annuity, 10%, 4 years. So our payments are $100,000, okay, times our multiplier, which I have to go to the back of the book to get it. Okay. Anyways, you can see it's going to be $316,947. So in this case here, since it is at least 90% of the fair value, and the fair value being 300, okay, it qualifies as a capital lease. Okay. Now let's just say our calculation figures out that, okay, so right now we have the fair value, current fair value is $300,000, right? Okay. So if we did our calculation, our present value calculation, and let's just say the payments were $95,000, okay, and it came out to not 316, it came out to something a little less than 300,000. So let's just say it came out to 285, for example. Well, is the present value of our payments at least 90% of the current fair value of 300,000? Okay, well, let's take a look. 285 divided by 300. That's 95%. Okay. So we're good there. We meet the present value test. Again, any one of those 3 criteria would trigger that lease as a capital lease. Okay. Now, number 4 is the asset a specialized piece of equipment? Okay. So we have all these criteria here. Now it's going to be a lot easier once we go into examples, okay, of how to calculate the difference between a finance lease and a capital lease. Sorry, a finance lease and an operating lease. But again, we want to know the criteria. How do we classify a finance lease? Well, it depends on the criteria, which is on page 1246. All right, so that wraps up the slides for today. I'd like you to read pages 1247, 1248, okay? And that's just going to be dealing with some terminology like bargain renewal term, lease term, guaranteed residual value, minimum net lease payments, okay? Things like that. Economic versus useful life, okay? So read up on the terminology. Again, I want you to do TR 18.1, TR 18.2, and exercise 18.1, and that'll be enough for today. And then tomorrow, we're going to get into calculating, is this a finance lease or is this an operating lease? And we're going to do the accounting for it. All right, everyone, have a good day and finish up that exam, and we'll see you tomorrow.